topic to focus on is what's happening with the oil prices, and add to that the currency movement, which is a double plus for our economy and is coming as a much needed relief to cushion our balance of payment situation, as also our import bill, which was under a bit of a pressure in the last quarter because of weakness in oil as well as weakness in the currency. Actually, rising oil prices and weakness in the currency. Okay, I believe we can go back to our guest. So thanks very much for taking out the time. If you can hear me clearly, my colleague Aisha and I were wanting to ask you about how the focus has been on crude. Its derivatives are a key raw material for you. How have you managed this volatility?
Now the environment with the crude price falling and rupee becoming strong against dollar, the polymer prices have come to a very affordable level. There is very small inflationary trend in our polymer price.
Right. Interestingly, you mentioned in a recent press release that international polymer prices have been trending downwards. What's the correlation between polymer and crude? If you could just highlight that. We know that there is an impact, but on a point-to-point basis, how does the volatility in crude impact prices for polymer?
Quite a large capacity build-up in USA, India and Gulf market. So though the crude price went up, the polymer price has gone downward trend. This is a normal cycle. Now in the plastic raw material, we have entered into bear cycle. No more bull cycle.
Right. With what lag does movement in oil prices impact polymer prices for you?
For us, as on today, in spite of crude price still at $63 higher, the polymer price have come down at international level. We are getting a lower price quote now compared to what it was 1.5 years before.
Sir, you've also been on an expansion capacity, an expansion drive. You've been putting a lot of plants in the last few years. Can you tell us your capacity utilization at this point of time? Any new capacities coming up which can lead to a big bump up in the volumes?
We had a capacity constraint, so this year we planned a large expansion at 11 our old site and 2 new sites. We are very glad to see that all the investments are taking shape properly. Our capacities are increasing month after month, and we hope that all the planned investment what we made will be in production in 2019-20. Thereafter, for time being, we will have no constraint in supplying product to the market.
But what is the demand growth versus the supply that you have at this point of time? As you're saying in FY20, post FY20, you will not have any major constraint. Can you just tell us the market size by then, and what will you be able to cater, say, probably in 21?
Demand growth this year in India is better than the previous 2 years. In last 2 years, there was demonetization, then the Real Estate Regulation Act, and then GST. All they are behind us. We are seeing a good push coming from affordable house, good push coming from infrastructure, and we are seeing demand increasing in agriculture segment also. So we are getting better supply position and better demand position in this year.
If I look at in H1, your demand or your volume growth was not that great, but your guidance still is 10%. Does that imply you are expecting a 15-16% growth in H2, which is the second half of the year?
Definitely see that this year our volume growth will be 10 to 12%, more on the upper side of the range, and value growth will be between 12 to 15%, again on the upper side of the range.
When we talk about the business, the sort of volume that has been happening, majority of the changes or majority of the volume gains are happening in the value-added product. Will that have a bigger impact on the margin front?
We are all focusing on the growth in value. We are not chasing volume. We are chasing only value growth and chasing return on our capital employed. directionally there are two change we change, and we are going to improve both the items this year. There is better value growth, better overall sale of value-added product, and better overall return on capital employed.
Okay. What's the outlook on the margins front, sir? How have you been able to maintain your margins, and what's the trend looking like there?
We expect this year operating profit margin should be between 14.5 to 15%, with a turnover in excess of 5,800 crore.
Right, sir. Thank you so much, sir, for taking out time for us. Always good to get perspective.